Okay, good morning, everybody, and welcome back to episode 20 of the Wilton Report. And my name is, surprisingly, Josh Wilton, and I'm the broker, and I'm also one of the owners here at Queenston Realty in Princeton. We're a little boutique located right on Nassau Street. So today we're going to talk about the Princeton real estate market as we do most weeks. I'm going to not do as much data as we normally do. We're going to kind of talk about the emotional why of people buy real estate. And what to expect in the fall market. To an extent, I'll do a full forecast the first week in September once we close out August. But today we're just going to talk about this. I hear this a lot. I don't get it. I don't get what's happening in the market, right? Because of the headlines and the economic news and everything else. And then when the consumer goes to buy a house in Princeton, they're surprised that other people still want to buy houses in Princeton at the same house. And we call that in our business multiple offers. So I want to talk about the emotional why and kind of get to the heart of why people actually buy real estate and to a certain extent sell real estate. So we're just going to kind of walk through it. It's more of an open dialogue type broadcast today versus data. So enjoy it and we'll get going. So, news media. I'm not one of these people like fake news, whatever. I read the economic news. I can't say I pay a lot of attention to the national or international news just because it changes every day. So once a week is plenty. So here's what you are hearing about the real estate market. We're in a recession. We're not in a recession. Jobs are down. Jobs are good. Market's slowing down. Our price is dropping. Our price is going up. And here's the answer. Nobody has any idea we're in a recession, and they won't know we're in a recession until a year after the fact. That's the way the economic market works. So economists will look back, they'll get a year's worth of data, and they'll tell you a year from the fact that you're in a recession. So we could be in one, we could not be in one, we won't know for a while. Who cares? A, it doesn't impact us locally as much. And B, it's not how people think in terms of real estate purchase, real estate demand. So our price is dropping in some markets, our price is going up in some markets. Is the market slowing down? Yeah, but maybe not for the reasons you think. So I'd shared this last week. Inventory rises across all markets. And this is like, you log in, this is an internal message board for realtors in the mid-Atlantic, right? Basically, I'd say New Jersey through DC sees all of that. So the first thing you see when you log in, inventory goes up. And as inventory goes up, generally speaking, prices go down. Okay, and that's a basic economic law. So if you have too much inventory, retailers will put stuff on sale to clear it off the shelves for what's coming next, right? In the real estate market, when you have too many houses for sale, the seller that's brave enough to make that first price cut will take the buyer off the market, right? So, that is a headline that's being bandied about. Inventory's up. So 5 days later from NAR research, and if you don't follow NAR research, you should, because Lawrence Yun, who's NAR's chief economist, is awesome. He's excellent, super smart guy, and he's got a very good handle on the data. This is a direct quote. We're witnessing a housing recession, the dreaded R word, in terms of declining home sales and home building, Lawrence Yun said. I'm reading it directly. However, it's not a recession in home prices. Inventory remains tight and prices continue to rise nationally. So which is it? Well, he's telling you it's both. Volume in the market is down. Less homes are being sold. The reason less homes are being sold locally in Princeton is that inventory is down 25% year over year. And this is after a 3-year decline in inventory. So you're at a literally historic low for the number of homes being sold, at least in Princeton, probably nationally. And when you have less supply, you're going to have less transaction volume. So, there are declining home sales. But the reality is, right, at least locally, right, there's not enough supply. So the next headline, and again, this is from the same people who put out the previous quote. So it's not a big surprise why we're hearing a lot. I don't get it, because the news is it buffets you every day if you watch it every day. So July 22, this is the most recent data you can get. Existing home sales were down 5.9% from June and 20.2% from 1 year ago, with all 4 regions of the United States recording declines. So right across the country, existing home sales were down. So, And you can see in the bottom left, right, there's 3.3 months of inventory on the market nationally. That's a seller's market. That 3 has to break a number 6 in order to become a buyer's market. So yeah, inventory is down, transaction volume's down, but it's still a seller's market. Now, it's up 2.6 from a year ago. So it's a little bit better for buyers and maybe not as crazy for sellers as it's been. However, year over year, nationally, home prices are up 10.8%. Volume's down, prices are up. It's driven by the lack of inventory. That's all it is. So, and here's another one. And I thought this was interesting because I wanted to share it because I talk about one of the more interesting Princeton dynamics. First-time homebuyers responsible for 29% of sales in June. Individual investors purchased 14% of homes. Cash sales, this is a national number. And you're talking like some big numbers on the coast, in Chicago, Florida, parts of Texas, some big ticket properties. 24% of all transactions nationally were cash. That is incredible, right? And here's the other thing too. Nationally, homes stayed on the market 14 days. 14 days. When I started in real estate, I'm not going to date myself, but a long time ago, rates were 10% and homes would stay on the market 60, 70, 90 days. Why? Because that was the market we were in. This is the market we're in today. So what's happening is consumers here, right? Inventory's up nationally. It is up, but it's up off of historic lows. So it's still historically low. Interest rates went up. Therefore, home sales are crashing. We'll talk about interest rates. Not true. So there's a lot of confusion in the market. And here's the reality. 25% of all home buyers are buying in cash. 65% of all contracts in Princeton are cash. So let's talk about jobs. So this is August 5th, 2022. The blockbuster July job reports throws cold water on the recession debate. Job report in July was very strong, right? Payrolls increased 528,000 in July, much better than expected and a sign of strength for the jobs market. So why am I talking about this? Well, there's a point to it, so just kind of stay with me. Current mortgage rates, August 17th, 2022, it's the most recent headline I could find, sits near 5.5%, right? 5.5%. Now, when you dig into that article a little bit, I want to point this out. So for those of you watching on YouTube, you can see the big yellow arrow, big orange arrow. People don't buy homes because of interest rates. If that were the case, when interest rates were 10%, we never would have sold homes. When interest rates were 18%, we never would have sold homes. The reality is that is the last reason people buy buy homes. So home buying decisions take a lot more consideration out of the interest rate anyway. It's part of the calculus. It's part of the neighborhood you might choose versus another one. But buying a home is about making a lifestyle choice. I'm reading directly from the article. What's going on in the interest rate market can influence a decision. Maybe you delay it. Maybe you don't. Maybe you buy down. Maybe you change your pick, your neighborhood. But it's not wise to base it solely on a few basis points on a mortgage rate. Setting and sticking to a realistic home budget is more important than the rate that you get. And that's true. So now I was thinking about it this morning, and I've talked about this multiple times in my career. Why do people buy homes? I can tell you locally in Princeton, the schools are a massive driving factor. Massive driving factor is the school system. Why? Because they're very highly rated and people want their kids in the best schools because the perception is they'll get in the best colleges. Fair, not fair, true, not true. It's open for debate, especially if you already live within the Princeton School District. Number 2, relocation, people moving in and out. It's a big pharma area. There's a lot of corporate work here. Bristol Myers is in Lawrenceville. Johnson & Johnson's on Route 1. There are a lot of people in and out of the area for work. Lifestyle. Princeton is very unique in that people want to live where they can walk to town. There is so much pressure in the walk to town area on inventory. There's nothing for sale, especially under $1 million, but nothing for sale. Access to jobs. You have trains to New York. You have trains to Philly. You have Princeton University, which is the largest employer in Mercer County. right? You have pharmaceutical, you have finance, you have everything. Babies, right? So my old employer used to say this, right? And this is in the recession, 08, 09. He would say, literally, right now, somebody's having sex. And in 9 months, they're going to need a place to go. And you know what? He was right. So, babies getting born, babies moving out of the house, right? Promotion, demotion, marriage, divorce, death, downsizing, empty nesters, kids moving out, kids moving back. These are literally the reasons why people buy real estate and sell real estate. So I have a closing today with a couple, faculty at the university, one of them. And obviously they're buying because of their job, right? It's close to university. But they also wanted to be walk to town or walk-ish to town. So there's a lot of things that go into it other than interest rate. Interest rate was probably the last thing on their mind, actually. They needed a house closest to town, right? And the people that were selling it, it was an estate. The lady had passed away, right? They're moving on with their life. So these are the reasons people buy real estate. It is not solely the interest rate. The other thing, too, I will tell you, and the reason I spent a little bit of time on the jobs report is you follow the jobs report, you can follow the real estate market. If people are confident in their employment, if they're confident in their opportunities to make money and pay their mortgage, pay their bill, the real estate market will continue to be healthy. If the jobs report is robust and interest rates go to 6 or 7, right, you're still going to have a very robust real estate market. Why? Because I've lived through that market already. If jobs start peeling back, right, and people feel a little bit less confident in their economic status, in their job, in their paycheck, you will see an impact of the real estate market. And the number 2 reason why is the previous top 10. So, that's really, those are the emotional reasons why people buy real estate. So that being said, in Princeton, inventory is down 25% year over year, right? So prices in Princeton, believe it or not, are still increasing. I thought we'd see a stop to it, but the precipitous lack of inventory is still leading to price increases. It's just the reality. If you're a buyer and there's one house and 3 other buyers, and you really want it because you need that commute to be at the university, you're going to pay for it. It's just what it is, right? So, but instead of 10 offers, you're seeing 2, 4, much more serious buyers. There's less craziness in the market. But I will tell you this, it is still an acute seller's market. So if you're coming into the market as a buyer and you're like, oh, the market's slowing down and I'm going to get a deal, I'm here to tell you, you're not. You're going to pay the market value for a home. So that's it. That's the wrap for today. It's more the emotional why people buy and sell. It's more the intangible in the real estate market versus the hard data, which we tend to focus on here. So I hope today helped you. If you have any questions, obviously you can always reach out to us direct. If you haven't subscribed, hit the subscribe button on YouTube or Spotify or Google or whatever you're listening to us on Apple. And we'll see you next week back here for episode 21 of the Wilton Report. Thanks, everybody.